One moment. I'll just let everybody join up right now. What's up, UG? I like your profile.
Thanks.
Like psychology tips. Just let a few more people join up. I'll start. So I was going to we're just gonna kind of go over this market review that ICT did, and then I'll kind of cover some stuff that we're looking at on the actual charts this week. But the focus will be like higher time frame analysis today.
Eurodollar and S&P and NASDAQ futures. So dollar index is our weekly chart here. You can see I mentioned this last week as a point of consideration for a discount. And while it looks like it touched it, it was one pipette short of touching the high, which is the actual low of this weekly candle here. You can find that with the week represented by the date here, okay? So far, we're working up into this SIBI, which is a sell side imbalance, buy side inefficiency. I'm watching how we trade in this area right here. Okay, so if we watch two price points that I'm keeping a close eye on, which is the consequent encroachment of this candle's wick, which is midpoint right here, and the same thing here. So the midpoint of that wick. Extend those two out. I want you to do that in your own chart. Okay, and how we trade, if at all, at either one of the chart. Okay, so you can see you got real close to it there, but didn't quite get to it, and then now we have pulled up into this sell side imbalance, buy side inefficiency. There's a small little gap. This is actually a real liquidity void, where there's no actual trading printed between these two respective candles. This candle's high and that candle's low. So it'll be interesting to see if it wants to get up to reprice into this area right here, that little gap right there. If it stays open and starts to trade lower, this can be something that can stay open for a long time. Eurodollar week.
So something I wanted to mention is whenever we see these like liquidity voids, especially if they have no wick, they're extremely likely to be traded to. So in this scenario, this is pretty one-sided because we're coming down, we're sweeping sell side. We have our weekly fair value gap that he mentioned, and then all we have left is like buy side. And yes, we have stuff in here that might hold us lower, but this is kind of what you want to see from a market right here. This is one-sided behavior because you have sell side taken, all you have is buy side left.
This candle's opening price. While we did have this candlestick's tail and this candlestick's wick overlap one another in here, what I have drawn your attention to, and this was ahead of time, so it's not just right now. We've talked about this for several months actually, but the difference between those two price points is that there is no body, no candlestick body on this time frame. So the weekly candlestick, while we did trade down with the candlestick's wick and the candlestick's tail up here, whenever a market shows an unwillingness to drop a body between two respective candlesticks, that is a volume imbalance. So I dubbed it as a volume imbalance because that time frame to be efficiently delivered. Okay, so the algorithm will refer back to weekly time frame There's an inefficiency here. Everyone else would not see this as an inefficiency because they see that it traded back and forth in here. That's not efficient. So the draw on liquidity that we've been looking for months has finally been delivered. Okay, so the high of the week, we opened, traded up just to the high of that inefficiency, which is the weekly volume imbalance.
So something he hasn't, I don't know if he's going to talk about it, but when we see this fair value gap and we see like we have a clear draw, which is these highs, we have the weekly volume imbalance, but we can anticipate that the weekly fair value gap right here is going to become inverted. So once it does become inverted right here with this candle, we could expect the next candle to trade through those highs, because once we get past this fair value gap, there's nothing holding us lower. There's no kind of resistance or anything that's going to hold us lower from coming up to these highs. I believe there was a similar setup like this on let me clean this up. Let me go to the daily. Sorry. Yeah, so it's kind of the same idea right here on NASDAQ. So we're coming up. We know that these highs are our draw right here, these stacked highs. And it's already playing out because we inverted this fair value gap, which was the only thing that was going to hold us lower. Now it's just a matter of seeing what day we have to have some kind of news driver that's going to push us to these highs. And I'm anticipating that FOMC might do that today. So I'd prefer actually we trade lower during FOMC, so then we could have like some kind of long position to get long with. If not, I mean, we also have Thursday that could potentially trade up to these highs. But I'm thinking for sure these highs will be around. Regardless, we are consolidating, we are ranging, but given the circumstances of this inversion fair value gap being there, these highs are vulnerable right now. So that's what I'm expecting to get hit.
And then we traded down near the close of this volume imbalance on the low end. So we had the high end of it, did right back down over top of that range from the low of the weekly volume imbalance up to the high, and then back down again. We had several targets from.
This is why it's good to leave higher time frame PD arrays on your chart when you're trading, because price is going to come back and refer to those levels. So right here you could see it just barely taps the top of it. Once this volume imbalance is balanced, there's a good chance that that's a sensitive area, the upper part of the weekly volume imbalance. So it's always good to draw out and keep those on your chart.
July 9th analysis video, you can find that on YouTube. And you can see this is where it began before this candlestick started trading. We were looking for a move back down into the weekly inversion gap and then draw to buy side, which it did here, and then draw up into the weekly volume imbalance. So this right here completes a rather obvious illustration of what my concepts can do for you, what you're looking for in terms of precision.
I just saw your question, champion. Let me go over here. What gap are you talking about? If there's a huge gap. There might have been a gap from rollover, but I don't see one right now. Regardless, yes, any gaps though that are made, for instance. Yeah, send a screenshot. Let's see the new week opening gap on this week. Right here. Honestly, we've already traded away from it quite a bit, so we probably wouldn't come back to that right now. Because we took sell side right here. We have this overall 4-hour fair value gap. And then we have this high with these highs. We're more likely to run that side. And we also had this daily fair value gap, which I didn't mark out. Yeah, we're likely to come up and extend through here. Oh, through the futures? So no, that's called a rollover. If you guys look at what Champion Monk is asking, he sent it in the chat. That's called a rollover. So let me see if I have it on here. Yeah, so even on here on NASDAQ, there's this huge gap. We don't want to see that. Sometimes on this chart, the futures charts, they'll have this is called adjust for contract changes on the bottom right. It's going to be BADG. You just click that and it adds it back. So yeah, you don't want that gap. That's more of a it's just because we switched contracts from the September contract, we're now going to the December contract. So you should actually change all your charts to this one, to December. So that's not a true gap.
And why the price should behave a specific way. And right now, at this juncture, mini futures, weekly chart on the right. All right, so I mentioned that this inefficiency here would be a likely culprit to draw up into. We did see that last week. This was the initial one here, which we saw that trade to and then went through it. Off the heels of this fair value gap, which is what we've outlined also. We had an interest in that. Weekly chart on NASDAQ, I mentioned this is likely to be a upside draw as well. And we got that delivered last week as well. And off the heels of the weekly fair value gap here in the discount. So it sent price higher. And while, again, I'm not trying to call the top in the marketplace, I'm not trying to pick a top. It's in an area where I think it's reasonable to see it come back down into this inefficiency here and over here respectively for the S&P down into here. Now, if we take out the down close candle on the weekly basis, if we take out that low, then I would submit to the idea that we're probably creating an in-rate term high on the weekly chart for S&P. Same thing here. If we trade below the down close candle here on a closing basis, so this is important now, it has to be on a closing basis.
So what he's talking about, to my understanding, is like a if we're going to have a reversal right here, and through a chalk, a change of character. So he's referring to if we close below the order block right here. If we were to close, come down, and we could see us potentially trade lower because of the way we reacted off of this volume imbalance.
S&P and NASDAQ. If it were to close below this candle's low, then I would likely assume that we are creating an intermediate term high, not that it's the top, not that it can't go higher later on in the year. It just means for right now, it would change gears for me, and then I would likely look for lower time frame sell setups and follow that low. And we have a little bit of inefficiency here between this candle's high and this candle's low. So it could trade down there and still not upset anything. And essentially that's the midpoint of that lower inefficiency on the weekly chart. So it could trade down there, wick below this, close in.
So what I like about this is we're constantly respecting fair value gaps. So you could see just based on the closure right here, even though we're wicking a little bit below it, our bodies are still respecting it. You can see that with this fair value gap as well. Just continued bullish order flow. This is really like a prime market right here.
In this entirely, even go so far as to get down to consequent encroachment of this wick. And then I'd like to see this area down here stay open as a breakaway cap. So all of that changes if we trade on a closing basis above Friday's high. Same thing here on NASDAQ. We have...
So he's talking about a breakaway gap. Usually when we have like a more balanced area like this, where we're up, down, but we're still respecting PD arrays, you'll have a fair value gap be left open like this. This is good. This shows basically continuation. We're most likely to keep going. So to see this fair value gap hold and then us not trade lower, we're more likely to see continued bullish order flow. And this is all on the daily time frame. This all applies to the lower time frame as well, because time is fractal. On a daily time frame, it takes more time for things to develop. But if you understand the higher time frame or the lower time frame, both are vice versa. They work with each other.
Almost entirely closed in this fair value gap here, but I'd like to see it trade down into this area here, into this order block. So I'm expecting and anticipating, and for my own analysis, predicting that we would likely trade down more into this inefficiency. Now, if we gap down, create a gap opening, trade up, and then go lower, then obviously that might require a little bit more movement into this order block, maybe mean threshold right in here. So it's a lot of wait and see, and it's always the case before we open up on Sunday. So I can have a lot of different scenarios that I would favor, or I would like to see, or my concern would be around a specific, scenario panning out in price on Sunday's opening price going into Monday's trading. But all of that is just, I guess, for the purpose of study, because I don't trade on Sundays anymore. And
all right, he's just kind of yapping. We'll just get on the charts, see what's up. See what's up with gold. I haven't really looked at gold in a bit. So we are still respecting this fair value gap right here. But we did come down and close below this high. Don't know what I just did there. Gotta switch time frames. Oh no, there we go. My bad. So we do have this fair value gap right here. But I am looking at how this, we traded down below it. It's a bit, we're most likely to trade to sell side at some point because we're just kind of consolidating. I don't know. It's a bit two-sided right now because we do have all these stacked highs. But at some point we do have to trade lower. All these stacked lows. But we could preface it off of what dollar is doing. So dollar took out this weekly low right here. Both of these are weekly swing lows. We had a really nice reaction off of that. So we're likely to come up, probably balance this out. So if we're going to trade higher, gold is more likely to trade lower. So that's, even though I don't know exactly what's going to happen with this because we have 2 draws on liquidity, I could look at dollar and anticipate, all right, well, if we're going to trade higher, then we have a bit more pressure over here on gold. So on just from a technical analysis point, we're more bullish, but something I was looking at is we're going to have a rate cut, which is more likely, or I mean it's 50-50, but I think we're gonna have a rate cut, so that should push dollar lower and push indices, everything else higher. But honestly, nobody knows what FOMC is going to do, so it's just a matter of reacting after the fact. How can we continue to see good setups after? But yeah, I would like us to trade up to this new week opening gap right here. That's what I'm looking at. This gap as well. Yeah, so once that we've took sell side, I believe we're more likely to run this buy side. In that same sense, I'm a little bit more bearish on gold. So it's my analysis. Let's look at GBP. Look at the weekly. Let me delete this. So on the weekly, we do have this gap right here. Volume imbalance. We are delivering from this fair value gap. So I am more bullish right here as well on as well as euro, as I mentioned. It's a bit of a weird reaction we had there, though. But I do think we'll still trade up into these highs. Just continued bullish order flow. You could see how price actually came down here into a premium. This is more like OTE. Yeah, 0.62. Kind of came up. It's making a balanced price range. So the last step would be trading up here to these highs. But it's a bit two-sided because, like I said,
so when people, so it's like half of the
sorry, it's a bit two-sided because yes, we're in a bullish order flow pattern. We're trading up higher. It's a bit uncertain with what dollar will do. So you just have to wait, honestly. Wait and react. Haven't looked at crude oil in a while. If you guys trade futures, crude oil is extremely underrated. It's a really good asset. But it looks like we're already trading up into this daily fair value gap, so I wouldn't be too interested into it. Yeah, other than that, thank you guys for stopping by. I'm probably gonna head out. What's up, Kryptonite Lambo? That question you asked me, Champion Monk, you should look at our YouTube. I have some stuff on there. Let me show you. Look at these Warrior Mind videos. I have little psychological tips, but I could share with you. I have a PDF that has to do with psychology that I wrote, and I'll give some kind of like assignment with that, how you could write your own psychology. Um, it's kind of like a guide, if you will, on like how to react in certain situations. And I'll just have you guys go and actually do it yourself. So yeah, I'll send that over. Yeah, other than that, you guys have a good day.